All right, all right. Good morning, ladies and gentlemen. We want to thank God for another opportunity to live this morning. We are so grateful. We are so thankful. We are alive. I trust and believe that you are doing fine this morning as you are joining us on this call. I want to welcome all of you to our morning session in the technical analysis Zoom. Protocol observed. All leaders joining us this morning, you are welcome. If you can hear me, kindly give me a one in the chat. If you can hear me, if I'm audible enough, please give me a one in the chat before we get started. If you can hear me, if my microphone is audible enough, kindly give me a one in the chat. All right, okay. Thank you so much. I'm loud and clear according to what I'm seeing in the chat. Thank you so much. Yes, my name is Mavuto Mopiwa, one of the coaches in Crypto Ambassadors. I'll be your trainer this morning. We started yesterday looking at TradingView, how you can use TradingView to do your technical analysis. So we did that lesson yesterday. And today we are continuing from there. We're going to continue from there as we continue with our syllabus. First week of the syllabus, we are starting over our syllabus. We ended it 2 months. That was last week. And then this week, we're starting the syllabus again, and we're going to be here again for 2 months. All right. So you need to be consistent when you are attending these lessons because they come one after the other. They are like interconnected. So when you miss one, probably you might find it difficult to get the next lesson unless you go and watch the lessons on our Crypto Ambassadors YouTube channel where they are also recorded. Good morning once again. Let's get into our lesson for today. As I was saying, yesterday we were looking at TradingView application where we were looking at how can you make use of it in terms of doing your technical analysis, trying to find the probability of winning a trade. Yes, when we are doing a technical analysis, we are predicting, trying to find a probability of a winning trade. This is extra knowledge that we are impacting on Crypto Ambassadors family. If you can see my screen, kindly give me a one in the chat. If my screen is visible on your side, please give me a one in the chat. If my screen is visible, kindly give me one in the chat. If my screen is visible, kindly give me a one in the chat. If my screen is visible, give me a one in the chat. If my screen is visible, give me a one in the chat. Give me a one in the chat if my screen is visible. Okay. All right. Okay. Thank you so much. Thank you so much. Okay. So today we are going to proceed from where we left yesterday. We're going to proceed from where we left yesterday. We were looking at TradingView application, how you can navigate the TradingView in terms of technical analysis. Now, let's get started. Let's get started in today's lesson. Okay. Okay. All right. I believe my screen is still visible. So let's get started from here. Ladies and gentlemen, when we are doing technical analysis, we are looking at understanding the market. So when you come to the market, you are going to hear words that are mostly used, especially in the crypto space. All right, you are going to find words that are mostly used in the crypto space in connection with the technical analysis. So you're going to hear the word like buyers, okay? You are going to hear words like buyers. You need to take note of this. You are going to hear words like sellers, all right? You need to be familiar with these words. You are going to hear words like bulls, all right? You're gonna hear words like bulls. You are going to hear words like bears, all right? You're gonna hear these words being spoken a lot. You are going to hear the word like demand, all right? Yes, you're going to hear the words like demand, and you're going to hear the word like supply, okay? All right, yes. So these words, all right, when we are talking about buyers, we are talking about bulls, we are talking about demand. Actually, we are referring to one entity or to one group of people, if they happen to be people. All right, so we are looking at groups, or we are looking at a certain power, okay? But you need to understand that when we say buyers, when we say bulls, when we say demand, we are referring to one thing. But mostly used words in crypto, it is bulls and buyers, all right? But when you go to the economics, you're going to find the word demand, all right? But sometimes we also use it. So this is the first thing that you need to understand. Apart from buyers, apart from bulls, apart from demand, we also use the word sellers, okay? So when we talk about sellers, we talk about buyers, we talk about supply. We are also speaking one language. We are saying the same group of people. Where am I going with this? You need to understand that when it comes to the crypto market, it is only comprised of two groups, okay, or two powers that controls the market, which is the buyers and the sellers, okay, or the bulls and the bears, okay? So these are the two powers that control the market. Now, when you know that these two powers control the market and you want to be a trader, what do? You need to have a study. You need to be one of them. For you to be one of them, you need to study how these two groups of people, how these two powers dominate the market, okay? How do you go about it? So we are looking at buyers and sellers that we are going to put our focus on. Whenever we are doing technical analysis, we are looking at a probability of winning a trade when you become a buyer or when you become a seller. All right. So these are the things that you need to understand first when you are joining the market. Okay. So when we speak about buyers, when we speak about the sellers, we need to understand that buyers, they are the ones that moves the price to the top. Okay, buyers, they are the ones that moves the price to the top. All right, while sellers, they are the ones that moves the price to the bottom. What am I trying to say now? I'm bringing you this idea, okay? You need to understand this idea, okay? So when the market is moving from the top, coming down here, this is what we call a downtrend, okay? The market is trending downwards. Now, when the market is moving from the bottom, going to the top, this is what we call an uptrend, okay? The market is trending upward. Now, who brings the market downwards? These are sellers. Sellers, they are the ones that moves the market to the downside, okay? Now, who pushes the price to the top now? These are buyers. Buyers, they are the ones that presses the price to the top. So it is a game between sellers and buyers, creating these two types of trends, the down trend and the up trend. Sometimes you will find that while they are trying to win the game, these two powers, you will find that the market will be ranging, meaning to say it is not going to go up, it is not going to go down, but it is moving on a sideways. So when the market is moving on this type of a sideward, you should know that these two powers, they are trying to find a consolidation. They are trying to find an area where one is going to lose power and the other one wins. So in that scenario, you are going to see that the market will be ranging, moving sideways, all right? But when it comes to trending, then you're going to find out that there is a downtrend and then there is an upward movement, which is an uptrend. If you have understood this, give me a 1 in the chat. I want to take you somewhere. That's why I'm trying to lay this foundation so that we move together. If you have understood this, that there are only two powers that dominates the market. It is only two powers that dominates the market. So when we are doing technical analysis, we will be studying these two powers. How do we become part of them and win a trade? Okay? So if you have understood this, throw me a 1 in the chat. Throw me a 1 in the chat if you have understood these two things I'm trying to lay a foundation on. If you have understood it, give me a 1 in the chat. Give me a 1 in the chat if we are together. If we are together. Okay, all right. Thank you so much. Okay, let me come back again to where we were doing this. Now, when you have understood these two powers, I said, for you to become one of them, you are here, you want to learn technical analysis. All right. So for you to join them, first of all, you are going to become a buyer, because you cannot become a seller if you did not buy. What will you be selling? So you needed to become a buyer. All right. So you needed to find a position where to buy. Now, for you to become a buyer and join the world market, we are looking at the crypto specifically. That's what we are talking about. We are looking at the crypto market. Now, if you want to join the crypto market and become a buyer, all right? So first of all, you need to know what language these guys do they speak, these buyers. What type of language do they speak? There is a language that buyers speaks, so as sellers. So for you to be able to join them, whether you want to be a buyer, but at a later stage you're going to become a seller, you need to learn their language that they speak. These groups of people, okay, these buyers and sellers, the demand and supply, the bulls and the bears, they have got a language that they speak. Now, this language that is spoken in the crypto market, it is embedded in the emotions. Okay, it is embedded in the emotions of these buyers and sellers. Whenever they display their activity of buying and selling, you can track through their emotions that they are displaying in the market. If you agree with me, give me a 1 in the chat. I have seen some of the Royal Q traders. They have got emotions. They don't have patience. Okay? When they enter a trade, okay, for them to wait for the trade to accumulate 3% take profit, they always monitor. The moment it gets to 1%, they'll be like, what if it does not get to 3%? Let me just sell it here and collect this 1%. All right? Yes, you are here. You know what I'm talking about. Okay? So You are displaying your emotions. Okay, you are displaying your emotions. So we can track you, we can know you, we can study you because of the activities that you are going to leave behind when you are trading through your emotions. Okay, yes. So buyers and sellers, they normally leave emotions when they are trading. So how do you understand this language of emotions that is portrayed by buyers and sellers? So this is where now our study is going to base on. We want to look, we want to know, how do we join the buyers and sellers in the market, understanding the language that they speak through their emotions. If you want to understand someone better, you need to go to their emotions. Yes, when they are low, okay? If you want to know someone, go to them when they are down. You are going to see who are they in real life, okay? Don't go to them when they are excited, okay? But if you want to know the real person, go to them when they are down. You are going to know who they are, because excitement, it is just for a while, okay? So what I'm trying to portray to you, ladies and gentlemen, is that in the act of buying and selling, buyers, they display their emotions, how they feel about the market. So you are going to discover that emotions that were displayed last week, there is a probability that those emotions are going to be repeated today. I'm saying emotions that were done or that were displayed last month, there is a possibility that in the month of October, those emotions can be repeated by buyers and sellers. That's why when we are doing technical analysis, we use past history, okay? We use past history to determine the future, okay? We use past history to predict the what? To predict the future. Because what happened in the past, history has got a tendency of repeating itself, especially when it comes to emotions. If you are following, give me a 2 in the chat. I'm laying a foundation here. I haven't started yet. I'm trying to catch you. I'm trying to get all of you so that we move together. Where am I going with this? So if you are following, give me a 2 in the chat. If you are following, give me a 2 in the chat. If you are following, if you are following, give me a 2 in the chat. If you are following, give me a 2 in the chat. Okay. All right. Let me come back here. So now we are trying to understand the language of buyers and sellers in the market, which is displayed through their emotions when they are doing the activity of buying and selling. Now, how do we measure? How can you measure the emotions of a person? That should be the question. How do you measure the emotions of the person? How do you measure temperature? Yes, a temperature of a buyer, a temperature of a seller in the crypto space. You are in Uganda, you are in Namibia, you are in South Africa, you are somewhere part of the world, but you want to see how the crypto market is behaving, how the buyers and sellers are behaving, and you want to join them. How do you measure that? So now, today, we are going to look at candlesticks. We want to look at candlesticks, which is an instrument that we use to measure the behavior of buyers and sellers, the emotions that are displayed by buyers and sellers in the market when it comes to buying and selling. All right. That's where we are going. We want to know about this behavior. So for us to understand this behavior, we need to learn the language. How do we learn the language? We need to find an instrument to measure that behavior, which is candlesticks. Now we are going to candlesticks. What is the history? How candlesticks came into the market? Okay, how candlesticks came into the market. As we speak about candlesticks today, there should be a history of these things. All right, so I'm going to take you to a brief history about candlesticks. Then after that, then we will be able to establish what are candlesticks. How do we analyze them? How do we look at them so that we are able to measure temperature of buyers, temperature of sellers? Yes. Now, candlesticks, they have been around for a longer period of time, okay? Especially in the Western world, okay? Yes, there are people who are inquisitive to know about history. So I'm doing this for those who want to know the history of candlesticks, all right? Yes, I know there are people who don't like history as well. They did not attend. Whenever it's time for history in the class, they were getting out of the classroom because they didn't like history. I'm very sorry that you are here once again. You are in this classroom and history is repeating itself. All right, yes. So candlesticks, ladies and gentlemen, they have been around for longer than anything else, especially when it comes to the Western world, okay? So when we are looking at the history of candlesticks, the Japanese were looking at charts, okay? The Japanese were looking at charts as far as early as the 17th century. Yes, the 17th century, the Japanese, they were able to start looking at charts. Remember, there was still buying and selling, okay? Yes, so they were looking at charts as far as the 17th century. That is the Japanese, all right? So, when it comes to candlesticks, in Japan, as early as 1654, okay? I'm giving you now years, 1654. As early as 1654 in Japan, rice trading was on demand, meaning to say the rice market, okay, the rice market was established. So there were buyers and sellers of rice by early as 1654. So rice became the commodity that was on demand more than any other thing, apart from other commodities that were there. Like they were also having gold by that time. They were having also what we call seed oil. Okay, they were having seed oil. They were having gold, but rice, it became like a hard currency for Japan by this time. Now, this time around, there was a rice farmer. There was a rice farmer by the name, this is the name, okay? This is the name. This is the name. This is the name. This guy was a rice farmer. So he had interest to know how can he measure the temperature of the buyers and sellers of rice. So this gentleman, Munehisa Homa, was the one who came up with the idea of candlesticks so that he is able to measure the temperatures, to measure the emotions of buyers and sellers of rice during that time. So Munehisa Homa was the gentleman who came up with the idea so that the price of rice, when buyers and sellers are buying and selling, it is able to be recorded properly. So this guy, Munehisa Homa, happened to be the gentleman behind candlesticks. According to history, when we read history about candles, This is the guy who came up with the idea of candlesticks. I think I have given it. Yeah, let me end here. It's enough. Now, let's go to this. Why? Why candlesticks? Why candles? I want us to understand this. Why candles? Candlesticks, they are very important when it comes to trading analysis. When you are doing your trading analysis, candlesticks, they are very important. First of all, candlesticks, they act as a visual representation of what is happening in the market. What do I mean a visual representation? If I can pull this screen here, and I show you this, let me change it to let's go to 5 minutes time frame. So that you understand, when I say candlesticks, they act as a visual representation of what is happening in the market. I want you to look at this candle, this current candle here. Okay, it is moving, it is changing to green, it is changing to red. So you can see that there is an activity. There are buyers and sellers that are involved in this commodity, if we may call it a commodity called pepper. So for you to know the visual representation of the price of pepper by looking at a candlestick, you are able to have a visual representation of what is happening. Do you get me? When I say candlesticks, they are a visual representation of what is happening in the market. So in this market of pepper right now, we are able to know what the market or what buyers and sellers are doing in the entire world when it comes to the asset called pepper right now. You can see this candle is demonstrating to us what is happening. While you are there where you are, while I am here where I am, we are able to see, all of us together, what is happening in the market of pepper right now. So this is a visual representation of what is happening in the market. So that is why one of the importance of candles, it is a visual representation of the market. For you to be able to do technical analysis in trading, you need to understand these candles. Candlesticks, they are considered as a visual representation of what is going on in the market. Just by looking at this candle, you are able to have a clue, or you are able to have valuable information about how the price is moving. Can you see the price is going up, the price is coming down. The price is going up, the price is coming down. In this case, you are able to see, of which we are going to establish later on, that when it comes to this candle, you will see that it is bringing an open where price is open. It is bringing a close where the price is closed. You are also able to see how high the market went and how low the market went when it was opened. Okay, when it was opened before it was closed, how high price went, how low price went. Just by looking at this visual representation. Am I making some sense? Am I making some sense? If I am, give me a 1 in the chat. If I am making some sense about why candlesticks, what is the importance of candlesticks? All right. If I'm making some sense, give me a 1 in the chat. If I'm making some sense to you, give me a 1 in the chat. This is the base. I'm trying to build a base for you to be able to understand where are we going with this. When we go deep, you should be able to follow up. When we go deep, you should be able to follow up. Yes. So I want to see if you are able to follow. Okay. All right. So it seems we are together. Another reason why we use candlesticks. Don't worry about the open and the close. I said I'm coming there. I'm just building a base here. I will come to the open and the close. All right, I'll come there. But I'm just looking at why candlesticks. So candlesticks, they are considered as a visual representation. Another reason why candlestick, it is because candlesticks, they are flexible. Let me bring here. Candlesticks, they are flexible. What do I mean candles, they are flexible? You see, when you go deep down into the technical analysis, you will find out that one can pick a trade, okay? One can pick a trade just by looking at a candle, okay? Just by looking at a candle, one can enter the market and exit the market just by looking at the candle without combining other tools to enter the market. Okay, one can enter a trade. That's why I'm saying candlesticks, they are flexible. The moment you understand better, you will know that when the market is opening, like for example here, you can make your entry here and you decide to exit somewhere here just by using the candlestick. So in this way, you are saying candlesticks, they are flexible to have an entry and an exit in the market without the combination of other. Yes, there are other professional traders. They can just look at a candle and say, here is my entry point, here is my exit point. So that's what I'm talking about when I say flexibility. Candles, they are flexible. Yes, candles, they are flexible. Okay, so you need to understand that the human behavior, especially when it comes to relation. Yes, let me bring this to attention. The human behavior, when it comes to relation about money, the human behavior, when it comes to relation about money, it is always dominated by fear. It is always dominated by greed. It is also always dominated by hope. These are the three things that you are going to find inside a relationship when it comes to money, when you want to know about a human being. I don't know if this is true, but you can agree, you can disagree. When it comes to money, me and you, we always hope. There is fear. At the same time, there is greed. These are the three things that you are going to find. So when we are doing technical analysis and we are trying to study the behavior of buyers and sellers, you are going to find these three embedded inside. That's why when you go to TradingView, you are not only TradingView, when you go to CoinMarketCap, you are going to see that they track the greed of buyers, they track the fear of buyers, all right, in relation to money. Okay, so we are looking at why candlesticks. Why candlesticks? I said they are flexible. They are also a visual representation of what is happening in the market. Okay, those are the most important reasons why we are using candlesticks. Probably we can also say this. Candlesticks, they can give us a better view or a better understanding compared to bars. Okay, compared to bars. What do I mean? Okay, let me bring this to you for you to be able to appreciate what I'm talking about. So these are candles. Okay, what you are seeing here on the screen, these are candles. Now I want to change these candles and bring bars here so that you are able to see what I'm talking about. Okay. Can you be able to interpret the market very well by looking at what is on your screen? Can you be able to interpret the market very well? You tell me. That's why I'm comparing that candlesticks, they are better to give us an interpretation of the market compared to bars. Let me put a line here. Let me put a line here. Let me remove the bar chart and then bring a line. If I can just bring this, can you be able to find a position of entry and a position of exit just by looking at this line? It is a little bit difficult. You need to take time. But candles, they simplify things. Can you see now? That's why I'm comparing these two so that you are able to understand why candles. If you are following, give me a 3 in the chat. Now I want us to move from here and go to another part. If you are with me, give me a 3 in the chat. Give me a 3 in the chat. This is foundation. This is foundation. This is foundation. I'm laying a foundation here. I'm laying a foundation here. I'm laying a foundation here. Okay. All right. So let's come back. Let's come back and continue learning. Now you have understand about candles. So I said that we are wanting to study two groups of dominance, two groups of powers that dominate the market. So I said already that it is buyers and sellers. So when it comes to trading view, where we are studying, where we are doing our technical analysis, the buyers, we have given them a color in terms of the type of a candle. So the buyers, we have given them green color, while the sellers, we have given them the red color. It is just a choice. You can change the outlook of your candle looking at what you want. Okay, you can change this. The outlook of the candle, it is about you. So here we are using green and red to define buyers and sellers. Okay, you have seen other people using white candles. It is their choice. Okay, it is their choice. I just want you to know this, that it is the choice. You set it in the candles. Which color do you want? In terms of the candles, which color do you want? Okay, which color do you want? Okay, can you see here? Can you see here? Can you see here? I want to put black here so that you are able to see what I'm talking about. Okay, it is the choice of a color. It is the choice of a color. So I have removed the green, I have put the black. Can you see? Can you see? So it is a choice. Okay, so that's why I wanted you to understand that in our analysis, okay, we are using green and red. You have probably seen people using white and red. It is a matter of choice. But the reason behind is which information are you looking for? Okay, which information are you looking for? So let me bring back the colors so that we stick with our green. Okay, we stick with our green. All right, we stick with our green. Let me bring the green back. Let me bring it back. Okay, we stick with our green here, and then we stick with our red in terms of colors. Okay, so here we are. Now, I was saying that buyers, they are represented by green, and the sellers are represented by red. Give me a 2 if you have understood these two groups of people or these two groups of powers. So we have labeled sellers red, while buyers, we have given them green. Okay, so the candles that you are seeing here that are in green, it means these are buyers showing their performance in the market. The candles that are red, it is sellers that are performing. They are showing you how they are performing in the what? In the market. Now we have started looking at the emotions of buyers and sellers using candlesticks. Are you there? Are you there with me? Are you there with me? Are we friends? Are we friends now? We have started entering into this lesson now. If you are there with me, give me a yes in the chat. Give me a yes in the chat if you are with me. Okay, all right. So let's come here. Let's come here and do step by step. So when it comes to these guys in green, whenever they want to enter the market, remember, the market, when we talk about the market, we can't talk about the market without mentioning price. There is always price connected to the market. There is no market that has got no price. So when it comes to the guys in green, whenever they are entering a market or whenever they are opening their market, they normally open it from the bottom, then they push the market to the top. If you remember very well, when I was opening, I said that you are going to see two trends. Okay, in most cases, you're gonna see two trends. Okay, can you see here? Can you see here? When I was talking, I said there is a downtrend and there is an uptrend. So the downtrend is done by sellers, while the uptrend is done by buyers. So I'm saying, when it comes to the uptrend, whenever these guys in green, they want to open a market, they open it from the bottom, they push it to the top. Meaning to say, buyers, they open below, they close on top, their price. Give me a 2 if this is clear. I'm saying buyers, they open price from the bottom because they want to buy low. If you are to make profit, you need to buy as low as possible. So buyers, they normally open from below, they close on top. That is the market for buyers. While sellers, they open from the top, they close it on the bottom because they are selling. That's why I'm saying you are going to become a buyer first before you become a seller. You must have something to sell for you to be able to make profit. So first you're going to become a buyer. So you are buying low, like what we say in Royal Q. Buy low, sell high. Buy low, sell high. What is this idea coming from? Because first you need to become a buyer. So when you are buying, you make sure that you are buying as low as possible. That's why the technical team, it brings signals that are in preset price. Why preset? We don't want to buy at the current price. We want to buy somewhere here down. We don't want to buy where the price is. We are anticipating that the price is coming down. So we want to enter here, not where the price is. That's why we do have what we call preset price signals. We want to buy at a cheaper price. So buyers, they open from the bottom, they close on top. Sellers, they open from the top, they close at the bottom. If you have understood this activity, give me a 2 in the chat. Because now I am going to bring a candle. I'm going to bring a candle where we're going to start looking at parts of a candlestick. All right. Someone who was talking about the open, asking me about the open the close, the high, the low. Now this is the time. Now you can understand better. But if you have understood this about entry positions for buyers and sellers, give me a 3. Did I say a 2? I want a 3 in the chart. If you have understood that buyers, they open from the bottom, they close on top. While sellers, they open from the top, they close at the bottom. Give me a 3 in the chart if this is understood. So now you know, if you want to become a buyer, you don't need to buy high. You don't need to buy at a higher price. It means you don't want to get a lot of profit. I always say that buyers, they are opportunists. They always find an opportunity. Yes, you tell them, what is the price of this thing? Me and you, we know each other here. When we go to the market, we ask a price of a commodity. They tell us, then we say, no. What about if I can give you this? What about if I can give you this? Eh? Are you here? If you are here, agree with me. Most of us, we don't want to buy at the price that is charged. We want to buy at least below what is charged. Yes. I knew, especially ladies. They will never buy something at the price that is given. They are going to negotiate. So I'm giving you the behavior of buyers. They want to buy as low as possible. Do you understand that? So when you come to crypto, it is the same behavior. It is everywhere. Okay? So we want to buy low and sell high. Okay, now let me bring my other slide now, where we want to look at parts of a candlestick, right? So let me share my screen on this other side and bring parts of a candlestick. All right. So I want us to get a little bit deep into this. I think we are going to end here. Okay, let me share my screen and bring this into attention. Okay, here is the Zoom. Let me share my screen. Okay, so let's go and look at the parts of a candlestick. All right, let's go and look at the parts of a candlestick. I think I've got my slides here. No, I have opened the wrong one. Let me go back. Where did I save my slides? I think here. Okay. All right. Can you see my screen? Is my screen visible? Okay, so I'm going to use this for learning. I think we're going to close here. So, so we do have 2 candles here. We do have 2 candles. The first candle, it is white. The second candle, it is black in color. So I want you now to change your attention because I was showing you green and red. So I want you to change now. The white one, it should be green. And the black one, it should be red. I'm simply saying this candle, it is for buyers. This one, it is for sellers. So let's look at the candle for buyers. What are the contents or what are the parts of the candle for buyers? So I said that whenever the market is opening, it should have an opening price. So when it comes to buyers, the buyers, they open from the bottom. That's why you see the open is here at the bottom. This is the opening of the market. Okay? This is the opening of the what? Of the market. If there was another candle here, okay? If there was another candle here and it has completed and another one is forming, okay? Let's say this is a 4-hour time frame. So the first candle is completed in the 4-hour time frame, and another one is emerging. When the other one is emerging, if it is buyers that are in control, you are going to see that the price is going to start from the bottom, it will be going up. Okay, so you can see that price were opened here and price went up. Okay, when price went up, it went as far as to this place or to this price. I'm imagining that there is a price here. If you go to your trading view, this area, you are able to see the dancing of a price, this area here. So there is a price here, meaning to say this is how high the price went. But when the session was closing, whether it was a 4-hour session, did the price closed here? No, it closed here. That's why we see the close of the session, the opening of the session, the closing of the session. In the presence, okay, in the presence of the opening and the closing, sometimes the price may go high, sometimes the price may go low. So where it goes low, it is called the low of the market. Where it goes high, it is the high of the market. Are you following? Are you following? Now, when the market goes high, then after that, it comes down. It creates something, this thing here. This thing that is protruding from the body of the candle. Here also it is appearing. This thing, it is called a shadow or it is called a wick. So when it is found on top of the body of the candle, it is called an upper shadow or upper wick. When it is found below the body of the candle, it is called a lower shadow or it is called a lower wick. Let me confirm if you are following. Give me a 1 if you are following. We are looking at parts of a body or parts of a candlestick. The candlestick comprises of the opening price as well as the closing price. In the presence of these two, the height or the high of the market and the low of the market can be created. Why am I saying this? Sometimes you're gonna find a candle that has got no wick. You're gonna find a candle that has got no wick on top and at the bottom. Let me go to trading view to signify this. If we can find that candle, what do I mean that you can find a candle without a wick? Can we get one here? Maybe let me go. Okay, we are still in the 5 minutes time frame. Okay. Let me change the time frame. Okay. I wanted a candle, a full candle. Okay, let's look at this. This is what I'm referring to, ladies and gentlemen. This is a candle for sellers, right? So can you see that this candle, it has got no wick or no shadow on top? Okay, so which one is the higher of the market? If a candle is like this, it doesn't have that thing there. Which one is the higher of the market? So where the body of the candle closes, the close of the candle becomes the higher of the what? Of the price or of the market. This is what I'm trying to paint a picture to you guys. Sometimes you are going to find a candlestick that has got no wick. So does it mean that that candle or that particular market has got no high, has got no low? No, there is a low. The closing of the market becomes the what? The low when it comes to sellers. Okay, when it comes to sellers, remember sellers, they open from the top, they close at the bottom. So if the candle has got no wicks, the closing and the opening becomes the high and the low of the market. Am I making sense, guys? If I'm making sense, give me a 2 in the chat. I'm referring to a body of a candlestick that has got no shadow. Where do you find the high? Where do you find the low? In that case, where do you find the high? Where do you find the low? When you see a body of a candle, it is full. It has got no shadow, no wick. Which one is the high? Which one is the low? So I'm saying the opening and the closing becomes the high and the low. Someone says is a bit confused. Who else is confused? Give me a 2 if you are confused. 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 If you are confused, give me a 2. Okay, let me repeat. Let me come here. Which candle can I use here? I'm looking for. Okay, let me use these 2 candles here. Okay, I want you to give me close attention because I'm gonna end here. This candle, it is for sellers. This candle, it is for buyers, according to the colors. So this candle, it opened here. Okay, it opened where the body is starting, and it closed below here where the body of the candle ended. That is the closing price. If you are to draw a line here, you're gonna see that there is a closing price this side. If you draw a line here, you're gonna see that there is the opening price according to this candle, because these are sellers. Now, I was saying, in a case where the candle has got no, has got no wick. So I'm saying this thing here and this thing here, it is called a wick or a shadow. Okay? So the shadows, they tell us how high the market went, how low the market went. If you look at this thing here, this means that the market went down to this size. Can you see here? My trading view is writing low, meaning to say in this trading session, this one alone, this is how low the market went. But when it comes to high, how high the price went, then we are looking at that thing here. Can you see where that shadow ended? That's how the market went when it comes to height. Okay. So this is in a case where the candle is having shadows, Now, in a scenario where the candle has got no shadow, for example, if I may push this candle and bring it here, this one. If I may bring this candle here, that has got no wick. Which one is the high of the market? And which one is the low of the market? That's where I was explaining. If you find a candle like this one, it does not showing shadow. There is no shadow there. So which one becomes the high of the market in terms of price? Which one becomes the low of the market? So I'm saying this is the opening. When it comes to buyers, they open from below, they close above. This is the closing. There is no shadow. So where price has closed, it is how high the market went. In this scenario, where there is no shadow, where the body has closed becomes the higher of the market. Where the body has closed at the bottom here, where it opened, because it's a green candle, where the body opened, if there is no shadow at all, that area becomes the low of the market, because when price opened, it did not go down. It just went up. It built the body until it went up. When it was closing on top here, there was no pressure for selling. We're gonna come and understand what is this shadow. What does it signify? When it is on top, when it is down, what does it signify? But now we are only looking at parts. What constitutes the candlestick? There should be the open, first of all. There should be the closing. There should be the high. Okay, I'm writing the high at the bottom. High should be on top, and the low, it should be here. So these are parts of a candlestick: the opening price, the closing price, the high, the low. So I'm saying some other scenarios. The high of the market, it is the closing of the price. The low of the market becomes the opening of the price when it comes to the green guys in color. But when it comes to the red guys now, it is a little bit different when it comes to opening and closing. Let me bring you here. Let's talk about these guys in red. Okay? These guys in red. The guys in red, they open their price here. This is where they open. And they closed the price here. This is where they closed the price. But in the process, there was the low. This is how low the market went. This becomes the low. But where is the height of this market? It means the opening becomes the high because there is no shadow. So where the price opened, it becomes the high. Where the price closed becomes the low. If the body has got no wicks, or the candle, I mean, when the candle has got no wicks. Guys, am I making myself clear? That the sellers, they open from the top, they closed it at the bottom. The buyers, they open from the bottom, they close it on top. In the process, there should be the opening price, the closing price, the high of the market, the low of the market, as well as the body. I think I can take questions because we need to end here. Are we okay, guys? If you are getting me, give me a yes. If you are getting me, give me a yes. If you are getting me, give me a yes. We are still drinking milk. Let me say this. We are still drinking what? Milk. We are still drinking milk. We are still drinking milk. We are still floating on top. Someone says we should not stop, we should continue. Fresher, you only need to understand that when you are buying at a low price, you are standing a chance of having a bigger profit because you have bought the item at a cheaper price. Okay? It's not about the upper wick, it's not about the lower wick. No, it is about buying as low as possible and selling it at a higher price. The upper wick indicates how high the market went. Okay? The upper wick signifies how high the market went. If this is a candle, okay, and it has got this wick and it has got this wick, it means that when the market opened, let's say that this is a candle for sellers because it is in red. This is a candle for sellers. So the sellers, they opened the market here. It means price opened here. That's where the price opened. But now when price opened, before it went down, it went high up here first, meaning to say, when this market opened, there was an activity of buying that took place first. I'm going to explain this when I'm talking about shadows. When I talk about shadows, what do they signify? But I want you to understand that when the market is open, okay, it's either it may go up or it may go down. That's why when we talk about entering in our royal queue with first buy-in amount, we open margin calls, understanding that from point of entry, the market can go down or it can go up. I don't know now if this is making sense from our point of entry. So the idea of buying low and selling high, that's what we are focusing on. So it is the behavior of buyers to buy as much as low so that they can sell at least high and make profit. It is not about the weak. No, it is about buying low. Am I answering your question, Frecia? Am I answering your question, Frecia? You just need to understand that the idea is buying low so that you can sell high. Moses, not now. Not now. We are not using the candlesticks to enter the market. No, we are not yet there. We are not yet there. James, James, among the two, who benefits more? Who are you? Do you want to become a buyer or a seller? But I was saying, you cannot become a seller if you did not buy. What are you going to sell? James, I'm asking this question to you. It's a personal question, James. You are asking among the two, who benefits more? The one who opens at a lower close or on who closes at the high? You cannot become a seller if you did not buy. What are you going to sell? So first you need to buy. Now, I want to ask you a question. When you are buying, do you want to buy at a higher price? Don't you negotiate? Why do you negotiate? Especially to those that are buying to sell. Why do you negotiate? You want to have profit. So whenever you are buying, you make sure that you are trying to buy as low as possible so that you get profit. You cannot buy at a higher price. Okay? So those who buys low, they are the ones who benefit more. The ones who buys high, they don't benefit more because their take profit is little. Yes, it depends on the market that you are dealing with. So if you want to make profit, make sure that in Royal Queue, you are buying as low as possible. I hope this is interesting now. I hope this is interesting, but we need to end here for today. We are going to continue tomorrow. Yes, we are still drinking milk. Yes, thank you so much, Zuli. You cannot close if you did not open. You need to open so that you can close. Thank you so much. So you cannot sell if you did not buy. So let's end here for today. We were looking at the body of the candlestick. We did find out that the body should, the candle should have the opening price and it should have the closing price. In the process where the market is open and then it is closed, you might find the high of the market, how high the price went. You might find the low of the market, how low the market went. But the main two things are the opening and the closing of the price. Those are the main two things. The high and the low, they are created by the open and the high. I mean the opening and the close. Am I making sense? Coach Julius, any announcement? I think I have done the task for today. Let me look for you. Let me look for you. If there are announcements so that you can make my coach before this team leaves the Zoom. Coach, where are you now? I'm looking for you here. Are you here, coach? Can I see your hand? I don't see you here, coach. Okay, all right, ladies and gentlemen, I was thinking that Coach Julius is here for announcements. Normally makes announcement, especially when there is very important information that the community needed to know about, but I don't see him here. So allow me to end the Zoom for today here, and then we are going to meet again tomorrow. Then we continue where we have left. Make sure that you don't miss tomorrow's lesson, because I'm going to go a little bit deeper. So if you don't connect what has transpired today and what is going to transpire tomorrow, then it's going to be difficult for you to grasp what is going to happen on Friday. Okay? So make sure you attend all these lessons. If possible, you don't miss any. I'm telling you, by the end of these sessions, you're going to become a very good trader, because you know that trading is about emotions. So you need to take your emotions out of the market for you to become a good trader. Yes. When people are chasing green candles, you should not be part of them, because you don't want to buy high. You want to buy low. Okay? There are people who always chases the market when it is rising. They chase. Then after that, they get hanged on top because of their emotions. I hope this makes more sense now. So let's call it a day. Let's meet in the next Zoom that is coming at 9 a.m. South African time, 10 a.m. East African Standard Time. Yes. So let's meet in that Zoom. But for today, let's call it a morning. Thank you so much, ladies and gentlemen. We love you all. Take care and bye-bye.